Well, hello everyone. Thank you for coming and welcome to the Lead 5050 Equity Index webinar. I'm here today with Leanne Lineker, who's the CEO of Lead 5050, and I am Ella Tyler. I am the COO of Lead 5050. And my job today is just to give you a top line overview of Lead, who we are and what we do. Leanne and I have been working together for nearly 10 years now on Lead 5050. And we're basically a company that helps organizations build inclusive workplaces. And we do that by looking at their data, their pay data, their policies and processes. We audit companies and we have a piece of software that helps them do that. And then we certify them to help change the dynamics and make do simple changes that can really make some huge impacts. We also do inclusive leadership training, and we've got Dirk here today who was on one of our courses. And we also put on events for all our community. So that's what Lead 5050 does. And I'm now going to hand over to Leanne, who's going to take you through one of our infographics about the gender pay gap and what it actually is. So over to
Yeah,
you.
thanks for that, Ella. Before we dive into this year's equity index, I thought it would be worth having a look at the UK gender pay gap ecosystem because there's still a little bit of confusion sometimes about exactly what the gender pay gap is, why it exists, and what it's different, what it's not. And I always think it's worth clarifying this and also saying that the gender pay gap exists because of thousands of years of societal conditioning. Nobody thinks that there's somebody who wants to oppress women, make sure that they're paid less. There are no bad guys in this. There's just the situation we found ourselves in. And we're very much about calling people in, calling organisations in. We never call anyone out. We think anybody that's doing anything to try and change the status quo and make improvements is worth celebrating. So let's just look quickly. So the Equal Pay Act has been a legal requirement since 1970. So what we're not talking about is equal pay. It's fairly safe to say that in the UK, people are paid the same for the same work regardless of gender. And there's a lot of work done around equal pay analysis. So the gender pay gap is not talking about equal pay. What it's talking about is pay inequality, which can be organisational, functional, or societal, and then the real gender pay gap. So I won't go into too much detail because obviously you can see from the infographic there's a lot, and we will send this round after the webinar. But you can see that it's a mix of things like years and centuries worth of discrimination and sexism, labour market history. There are very much jobs that women traditionally go into and men traditionally go into. Sectors that women traditionally work in, like say, for example, in the airline industry, where there are a lot of women working, but they're very much working at operative level. Pilots tend to be male. So there's a huge gender pay gap in that industry. Doesn't mean we can't improve it, and there's a lot of work to be done, but you can see the kind of thing that I'm referring to. And then there is what we call the real gender pay gap, where there are a lot of women not in paid work, a lot of women doing unreported work. Women work fewer hours, and part-time work leads to zero pay increase over time. There are things that we can do about it, and we've highlighted the top 5 things we think organisations can do to close the gender pay gap or move towards closing it. I won't, as I said, go into too much detail because we have the much more entertaining and knowledgeable Tom Rosenberg coming up, who will look at the top 5 things that we've identified to close your gender pay gap. That being said, let's move on. I'd like to introduce Tom Rosenberg, ex-math teacher, a data analyst, all round great guy, brilliant with numbers, fantastic at interpreting data in a way that the layperson can understand, which I know me and Ella very much appreciate because even though we love learning about the data and what you can do when you understand it, we sometimes find it hard to get our heads around. So if you're like me and Ella, you need people like Tom who can take something very complicated and make it seem simple and accessible. He was instrumental in the creation of the Equity Index, which is a fantastic tool, and I encourage you all to have a play around with it. It's really interesting. Tom, let me hand over to you. Thank you.
Thank you, Leanne. That was a very wonderful and big build up. So now I'm feeling lots of pressure to keep it
Totally.
entertaining and get all the data across. We had a really great day last week when we had a bit of a launch on this in London. And yeah, it was fantastic. I had some really nice interaction from the crowd that we had there. So let's, with no further ado, we'll go into the equity index report. So what is the equity index? That's the big burning question, which some of you might not be aware of. So we take this, which is government data. So it's a statutory requirement for any company in the UK with over 250 employees to submit their, and it's quite a complicated process if you actually look at the instructions. So unless you've got someone who is pretty handy at maths and good with data, trying to submit that, they could very easily go awry with it. But it's a very stale and massive spreadsheet. So nothing very exciting. And it is, even someone like me who likes data, it's kind of like, oh, that's a bit dross the way it's presented. So what do? We create this, which almost looks identical, but has colorful headings, and the data is also organized. It's now being ranked. You'll notice down the left-hand side, you can see a rank. And so what we've done is we've looked at some key metrics that we've identified as being important, allocated a score system to them, and then we can give companies an index score, which is out of 100 or 100%. And then from the score and also from some other factors, we can then rank the companies in order. So really useful, and it allows it allows companies to be able to sort of make comparisons with other companies. So there's a very long-winded methodology that we use, which I won't go into detail here, but you can access it via one of the Lead5050 websites. And if you wanted to go into more sort of granular detail of how we actually get to allocating the rank. So once we have put all of the data from the government site and we've uploaded it and we've put all of our wonderful magic onto it, sprinkled some fairy dust, we create the equity index. And so initially, if you go to the Lead5050 Equity Index gender pay gap site, it looks like this, and there's a large bee swarm of all of the companies in the United Kingdom. So this year, this is actually an old graphic from a previous year, but this year there are nearly 11,000 companies who have submitted their data. So all of those, all that big red blob is basically lots of little red dots which represent all of those companies. And along the bottom axes, we have the equity index score out of 100. So you can sort of see that there's very few at one end here, which is 100%. And thankfully, there's also, well, one very poor achieving company down here, but it peters out down there, and you can sort of see the bulk of them all around this sort of 60% mark seems to be one of the widest points. And so the idea is over the years, this swarm could all move up towards this end, and then everyone could be achieving these wonderful scores. So even though they get ranked against each other, they could all be scoring up in the 90s on the index, but there's other factors that will sort of make them rank in between each other. You're then able to zoom in on one of the metrics. So the metric could be what sector they work in as an industry. It could be a regional, or it could be company size. So once you've zoomed in, so this particular one is showing just transport as an example, and the top 12 on the right-hand side has now changed. So it's always the top employers for this segment. So it's much nicer. So all the companies that exist in this sector have just stayed in their B swarm position, and you can sort of see who's doing what. But at the moment, you might think, well, I don't know what red dot is what. But if you hover over them, you can identify a company, and then you can click on a company, and you can get greater detail of what they have submitted. So this is really useful because you can look at their quarterly split down here of how many people of each gender in each pay quarter. So you've got an upper pay quarter, a upper mid, a lower mid, and a lower pay quarter. And there's also a section on who gets bonuses, what percentage of people get bonuses, etc. And what's a really nice feature about the index is you're able to compare 2 years against each other. So in this example, you can see 2022 being compared to 2021. So you'd be able to look into a company and go, oh, they've not changed at all over that time. Or, oh, what a fantastic transition they've made. They've really improved their quarterly split of genders. We do go up to 2025 because that's what we're launching now, and we go back to 2018. So lots of years that you can compare there. So the next question some people might ask is, why did we create it? We wanted to make sense of the data, because as you saw, that initial spreadsheet was just a massive sheet of data. It is massive. Like I say, 11,000 rows, and it goes across into the double letters, just to give you an idea of how many columns there are as well. So we wanted to make sense of that data. We also wanted to correct some skews in the data. Very quickly, when I got involved, I noticed that the way the government works out the data does create some skews. If anything is favoured towards females in a company, which is also sounds a bit bad, but it's a negative figure that comes out just because of the way it's calculated. It's actually exaggerated when it's skewed towards females. So we have made a correction for this. It was a very simple correction. Obviously, being an ex-maths teacher, I found it particularly easy. But I'm a little bit surprised the government haven't made this correction. I think we submitted a couple of years ago our views on that, and we didn't hear anything back, which is a shame. We also wanted to make use of the data, which is always good. A lot of companies have loads and loads and loads of data. So much data is collected in this day and age. Just clicking on a web page creates lines and lines of data. It's quite scary how much data there is on all of us out there. But a lot of people aren't actually utilizing that data usefully. But the only people who do use it are annoying advertisers who find out what you're looking at and then just ping you with lots of information. There's a lot more useful information that can be got from data. It is technically, we've written free and accessible to all. Technically, the other data is already free and accessible if you go onto the government website, but it's very dreary and not very useful to read. We wanted to make this nice, sensible, colourful WYSI data free and accessible to all. So it is. And we also wanted to enable companies to benchmark themselves against their peers, against other companies, and sort of see how they're comparing with each other, because that's good, because that sort of competitive edge could drive some competition to sort of go, actually, we want to improve it even more, not just because we're doing the right thing, but because we want to beat Joe Blogs over there. So what is it not? So we've talked about all the wonderful things that it is, but what is it not? And like everything in the world, nothing is perfect. So it isn't perfect. And the reason for this is because there is missing data. Companies are responsible for entering the data. And if they sort of maybe feel they can't work it out because it's like, oh, I don't really want to spend all afternoon doing this, they might just leave bits out. It's statutory to put this data onto the database, but they haven't made all of the categories statutory, which is very, very strange. So some data is missing. Some data can be incorrect, because if someone's done the calculation wrong, and it's very easy to do calculations wrong, then that means they're actually entering incorrect data, and they may not realize it's incorrect. The brands aren't always clear. So if you wanted to compare yourself to a particular company or brand, the company name that they kind of register with the government under could be very different to what we know as the sort of the public name of that company. So that can be slightly confusing. There's also multiple companies. So the same company name will have multiple divisions, and depending on the size or the way the companies are structured, they might have to enter separate data for all of them. So for example, Shell have got lots of different company sections to them, and they have to enter the data for all of those separately. So if you're trying to get a sort of an overall image of a company, you might have to look at several branches of it. Sectors and regions are not provided by companies, which is a real great shame. We've had to sort of start doing that manually. And that's a long process, especially when you've got 11,000 companies. And each year we have to sort of look at that. And so there will be some companies who don't have, it has an NA next to their sector or region, which is a frustration, because it'd be really great, I think, for the government. They'd be able to look at the data more usefully if they have more useful metrics that are actually being filled incorrectly. And the other problem, and probably the biggest problem of all, is it's not regulated. Having been a teacher myself, I know how regulated that is, and you're very much looked at. There are companies coming in like Ofsted who are making sure that you're doing the right thing and everything's working correctly. There's all the safeguarding in place for children for obvious reasons. But yeah, this isn't regulated or enforced at all. So while they say it's a statutory requirement, they don't actually follow that up necessarily. So companies can enter their data late. They can sometimes leave it for a whole year. It's very strange because you have to take the point, you have to pick a date point where you're saying, right, this is the information at this particular point, because obviously you've got you've got churn within a company, so people coming in and out. So you've got to pick a chosen point. So then obviously you could choose a favorable point if that's possible. But yeah, it's not regulated. So that's a shame. And that's something that we would love if it was. So let us have a look at the 2025 index, the results and some insights, which I'm hoping to enlighten for you. So first of all, we can see by this beautifully colorful graphic, a bit of color always helps any graphic look nicer. And a big table of numbers is very overwhelming for a lot of people. A lot of people are intimidated by numbers. Maths is a real Marmite subject, and numbers do scare people, but they shouldn't. They're very friendly, they're very lovely, and they're very useful. So here we can see, if you look down the side, hopefully you can see my blue blobby arrow thing. This is telling you the size of the companies who are submitting data. And for the eagle-eyed of you might notice there's a very slim purple layer right up at the top, which you just saw there. And that is the company is over 20,000. So this sort of dark blue patch is 5,000 to 19,999. And if you've got 20,000 employees or more, then you go into that pub. It's normally around between 60 and 70 submit each year in the UK. So that just gives you an idea of the spread of the company sizes. But also what's quite useful about this is that you can see that since 2021, more and more companies are submitting this, not just because it's a legal requirement, well, probably because it is a legal requirement. We had a discussion the other week about whether it looks weird to have 2025 on the far left, because normally we read from left to right. But when we created this graphic, we just thought, actually, it's nice to have, because your eyes are drawn to the left. It's nice to have the most recent data there. So food for thought, and we're open to suggestions if we need to change that. The other thing to note is that these headline numbers along the top are the number of companies that are in our indexes for those years. So we've chosen, we created the index in 2023. So 2023, 2024, 2025, we took it at a certain point. We'd allowed 2 weeks, 2 to 3 weeks over the deadline to allow for some of those naughty stragglers to get their data in. And that's where we've taken our number. But it's possible other companies did enter since then. And the previous data from 2018 to 2022, that was taken in 2023. So that should be the maximum number who have entered for those years. Ooh, another nice colorful graphic. So this is a breakdown of the mean pay gap. Now, I don't want to insult anyone by explaining things. So if you do understand mean and median, that is fantastic. Not everyone does. So I am just going to briefly explain how it's worked out, so you can get an idea of kind of what it actually means. So the mean is when you get a bunch of data. So in this case, what they asked to do is they take all of the men's pay, the male pay, and they have to work out the hourly rate, which I already think is quite a complicated thing to do, because a lot of companies will just sort of pay, here's your annual wage, and we expect you to, yeah, you've kind of got an allocated number of hours that you do per week, but really, as we all know, a lot of places you work more than that. Do you take out the holiday pay? So it's that already, that one task is, I think, quite confusing and complicated for a company to do. But you take all of the male hourly rates of pay, put them add them all up and you divide by the number of males, and that will give you the mean of the male pay. You then do exactly the same for all the females in your organization. And then what they do is they say, right, do male mean, take away the female mean and divide by the male mean, which will give you a percentage of how different they are. So normally, as you can see by these graphics, you can see how many more thousands of companies favor males. Okay, so that means that the male mean pay is higher than the female mean pay. And so that's why they've chosen to do male take away female, but that is where this error occurs of exaggerating the mean pay gap that's favorable to females. But again, like I say, I won't fully go into that because I could talk hours about that. So ideally, you might notice there's a very thin little green bar down the middle. That is where there is no gap at all. And in an ideal world, that green bar would just be super duper wide, if not the whole width. And then you just know that there is no pay gap at all. That would be fantastic. So they also have to submit the median pay gap. Now, the median is when you take all your male pays, put them in order from lowest to highest, and you find the middle one. Okay. So what the median does is it ignores any extreme values. So if you've got some, I don't know, COO or COO who's on, or CEO who's on, oh, I don't know, £2 million a year plus bonuses and goodness knows what else. And then most people are kind of getting paid around the sort of 30, 40, 50,000 mark. It completely ignores them, whereas the mean, that pay will have an impact because it will get added into the big mix of numbers and then divided by all of the male pays or female pays, because they could be either at the top. But the median kind of ignores that. It just says, right, here they are all in order, bang, there's the middle one. Here's all the females in order, bang, there's the middle one. And again, it works out the difference, and it's a percentage difference between the two. But again, we can see that it's still heavily weighted towards males. However, because of the way it's worked out, you would expect this to have more no gaps. So the green bar is wider here, and that is totally expected in my eyes because of the way it's mathematically worked out. But still pretty staggering when you start looking at the percents that are favouring males and females. Oh, I do like these little graphics as well. So this shows you a reported gender split by pay quarter. Now then, it's very important, it says here, these are estimated workforces, okay? So each company has to submit a company size, which I showed you in the first colourful graphic. So up to 250, 250 to 500, 500 to 1,000, 1,000 to 5,000, etc. So what we've had to do, and this is a legitimate way to estimate a total when you don't know individual values, you take the midpoint of that range and you times that by all of the companies within that. So for 500 to 1,000 workers, we've assumed they're all 750. The reason that's legitimate is because there'll be quite a lot of them will be bigger than it, quite a lot of them will be smaller than it, but it will kind of average out to that midpoint. So that's what we've taken as an assumption. We've times that by all of the percentages they've submitted. And currently it is looking like the gender split for this year for all the companies who have submitted. So there are lots of very small companies who don't submit, but there are 51.3% of that workforce are females. So it's estimated there's about 500,000 more women in this workforce than there are males. However, so it's pretty much, that's kind of like near that 50-50 that we kind of would expect. But what's really interesting is when you come to looking at the splits of the highest pay quarter down to the lowest pay quarter, and we can really see that blue bar swinging over and being larger. So you've got that 56 to 44, then it goes to 50-50, perfect, upper middle pay gap, you get a gold star and a well done sticker. Lower middle pay quarter and the lowest pay quarter, however, you can see that the female barometer is swinging over, and there are more women in those lower paid brackets, which is what Leanne was talking about earlier with this is where the real gender pay gap exists, to do with where the genders are allocated within companies. So has anything changed? Because we got all this data, we thought, well, let's have a look at if anything's changed over the last 5 years. So we are looking at the percentages favouring men for the mean pay gap, for the median pay gap, and then looking at the overall quarterly split. And has anything changed over the 5 years? Well, very little, which is kind of sad because this has been in the forefront of a lot of companies' minds for quite a while. So you would kind of feel and hope that there would be maybe more progress would be seen. I think one of our speakers last week mentioned that it's predicted to get gender parity within companies. It could take over 100 years, and yet we might be in flying cars within 30 years. So it kind of seems a little bit messed up that there's all that focus going into tech and flying cars, whereas actually this should be quite a simple thing to fix, is predicted to take much longer. So very little. We can see a slight improvement in the fact that it's not such a large percentage favouring males. It's dropped by 1%. But in an ideal world, we'd want this one, the mean, the neutral companies with no gap. That's what we want to see really getting bigger, because the whole point of Lead 5050 is that we want everything to be fair. We're not just saying, right, get all the companies run by women, get all the women paid more money. That is not the bigger quest. The real mission is, no, we just want it to be equal and fair. So you can see there is a slight improvement for the median. That's gone up slightly on the neutral front, and the males are slightly reduced and the females are slightly increased. Actually, no, the females have stayed the same. Sorry, apologies. Let's then look at the quarterly split. So this 50-50, which is wonderful. This is what you want to see. That was back in 2021. We've now slightly gone away from that, but that's not a problem. This is a very minimal change. What you really want to see is these all improving. And you can see brilliant. They're closer to 50-50 in the highest pay quarter. The upper mid, as we already saw, is bang on 50-50. This one has improved ever so slightly, but really, sadly, this one's actually got worse. So that's not good. So we want to see all of those hitting. They should basically, these quarters should all be the same as the overall split, because then if you've got 49 to 51% of male to females, then that's what should be the split in all the pay quarters. That makes perfect sense. So little bit of improvements, but still work to be done. Now then, we can come to the top 25 ranking organizations in the index. And what we've done here, or what I've done here, is shown a little bit of a history of where they've appeared. There's a lovely key or legend here, which all good graphics should have. And so the dark green is showing it's in the top 50 out of 11,000. The slightly, I suppose it's paler green, yeah, it is. It's 51 to 100. Then a lighter green is 101 to 300. And then we've kind of got that kind of darker beigey orange. I should have thought of the colours first. Didn't think of that. I'm sure Hessian, let's call it Hessian, why not? I'll go with the Dulux colour, which is 301 to 500, and then a slightly lighter colour taking you to the 1,000 mark. I've then got a white background with the Hessian writing for up to 2,500, which is kind of within the top 25%. And then if it's just blank white, that means it was above 2,500 in position. And I just haven't put the number in there just because it's kind of like, okay, we're focusing on the companies who are, excelling and in that top 25%, or it's actually less, it's about 22.3%. So, and if it's got a big old dot in, well, guess what? That means they didn't put their data in. So really interesting when you see a company like this, Alderforce Limited, they enter, then last year just didn't enter. There was nothing came back about that because it's not regulated. Then someone might have just sent them an email saying, oh, you haven't entered this yet. And they said, oh yeah, we know. And then just didn't bother. So that's why it needs to be enforced. But yeah, this gives a bit of history over the time, again, going maybe in the wrong order, but it's still going across of how they've performed in the different, and I've written in top 500. It's actually the top 2,500. Naughty me, didn't change my own graphic. So you can see, well, Angel Human Resources have been banging it out in first place 3 years in a row. So it'd be really interesting. I think we have approached them, but didn't hear back, didn't get an in. But it'd be really nice to know how they've achieved that, because in the previous 2 years they were less than 2,500 in rank. So they've just suddenly excelled. So had they made a massive change, or has someone got confused with how they've entered the data? We're not sure. But we should have a chat to them. You can also see ResponseSec. First time they've entered, they've come straight in at 2. So really interesting, sort of where these companies can come. Demi Power are pretty interesting, because I think they've got 2, maybe even 3. Oh no, just two of sections of their company appear in the top 5, no less. Anything else to say here? Yeah, we've got some companies who have done fantastically, sort of, over time. They've really been high achievers. Registers of Scotland. Scotland seem to do really well, actually, because Registers of Scotland are really good. Edinburgh Leisure, they're up there as well. Later on, I'll talk about Fife. So they seem to be doing really wonderful things up there. Leicester City Council, they've been super consistent. Top 50 5 years in a row, really brilliant. Ashley Cleaning Services, really amazing historical kind of consistency, which is really nice to see. So these are the sort of companies that we're trying to get in touch with to say, what are you doing? What's your secret? And we can share that story with other companies as well. So we have chosen some industries to look at. If you're interested in other industries being added to this, please do let us know. We're always happy to. If I did every single industry one, it would have been hours and hours and hours of work, which is fine because we all work hours anyway. But it's kind of, there is so much data out there. So it's kind of like, well, let's handpick some that we can look at. Also on reflection, having done all the work, travel and transport should have been maybe travel and tourism and then transport as a separate industry, because that separate out more nicely. But otherwise, all the other they're all legitimate sectors to look at. The only reason for the order going down in like that is just the size of number of companies, not the size of the companies, the number of companies that were in those sectors. Okay, so quite interesting. Education, the biggest kind of individual sector. Lots and lots of organizations within the education sector. But interestingly, although they rank really quite highly and have some really high performing companies, because there's so many of them, their average is actually lower than the energy sector for the percentage they achieve on the index score and their average position within the actual index. So it's quite interesting, because when you look at later on, there's a chart we're going to look at of the individual sectors with their top 30, and you'll kind of look at energy and go, oh, they look awful. They've got no one in the top 100 even. But well, you can see there the highest position is 257. But they're actually, on average, they're kind of more closely packed together, whereas say the education, for example, is more spread out. What else do we notice about this? At the top table, so we've got average index scores, ranks. While we've only shown the favourable for males, just because you only needed really one of them, because you know that the rest are either female or neutral, and it's still kind of showing these high figures, and all of them are well over. Actually, here's a great improvement. So in leisure, just 53% are favouring males. So that they're kind of on the median, are getting very close to that gender equality that we're looking for. But the rest are all quite high, and in the mean, which is probably a clearer picture, it's really quite high. And in some of them, I was very surprised by this figure here, that 95% in the education sector of them favour males, because it is, as you can see down here, it's very heavily female orientated. So that was a real figure that surprised me. So I'm definitely going to relook at that, because I'm fascinated that it's that high. And then the bottom table is just sort of showing the split. And what you really want, like I said before, is this overall split. You want that to be reflected all the way through. But in every single sector, you can see that the highest pay quarter, the male percentage, so 41%, is always higher than the overall percentage. So that is kind of still showing there's this inherent kind of still stuck in a bit of a rut. It's like, oh yeah, no, it's just natural that there's men who are going in the top positions, and that's something that needs to change. And as said before, these figures are all estimated from the company sizes. So if we go into a little bit more detail, I'm going to, if it's okay, I'm going to have a little drink break because I'm talking a lot. We'll have a closer look at a couple of these sectors that we've chosen to highlight. So just so you know, as I've mentioned before, the negative figures is when it favours females. These are the original figures that they have submitted. We have corrected the mean and median for the gender pay gap and for the ranking, but for the sake of the figures, I've left the original data in for now. Because it's useful, because you can see you know straight away that the negative figures do favour females, so it makes it jump out a lot more easily. So what have we got here? So the negative male and female columns favor female. So you can see there are some, but not many. We've also got the top companies. Really some really good scores here, really fantastic. And we've got 3 of them in the top 50, which is really amazing. And you've got the overall split here in greater detail, and then you can sort of see the split going across. And generally speaking, they're pretty similar. So here we've got a 37.5, and it's 37.35, 41.37. So it's pretty similar all the way up, and that is what you want to see. You want to see if there is going to be a split, it should be the same all the way through the company. And that makes total sense. So all top 10 are in the top 135 nationally, which is really fantastic. There's been a minimal change. So what's changed in the last 5 years? So I've just gone sort of zoomed in into these particular sectors. Very little, in fact, favouring males has increased in the last 5 years, which seems really strange, as has the median. Receiving a bonus. I was a teacher for 15 years, never received a bonus. So I'd love to know who those people are getting bonuses in the education sector. But this also includes companies who provide for the education sector. So companies like, say, Pearson's, who make exams and print a lot of books, they are included in the education sector. So they're probably more likely to be the companies where bonuses are being submitted. You very unlikely to get that in a state school. And education, again, we can see the split has ever so slightly improved towards 50-50. But there has been a drop. Yes, no, wait a minute. No, that's got worse. No, it hasn't. Yes, it has. It's got, oh no, it hasn't yet. No, it's got further apart. Sorry, getting confused because it's the male number has gone down. So I was thinking, oh, that should be better. But actually that should be going more towards 50-50 as well. But at the moment, it's still kind of in line with the overall split. Lovely. So there's education. Food and drink, again, really high performing sector, sort of in comparison to overall. All top 10 are in the top 55 nationally, which is phenomenal. Really wonderful to see all these zeros, because the zeros are telling you that it's totally equal in the median pay gap. Nearly all of them, 8 out of 10, which is great. And these, this is a percentage difference. So to be 0.2% out, it's a tiny bit exaggerated because it's negative, and 0.01% out is phenomenal. So that is basically, that's pretty much as good as 0 as well. So that is really wonderful to see. And these are also decent. The highest is 3.87% difference, which isn't too bad at all. What have we got here? So we've got the median, all 10 are amazing. Yes, I mentioned that. All the companies, this is quite interesting, all the companies favouring females actually have more males working for them. So we can see 1, 2, 3, 4 companies all have favouring females in the mean pay gap, but actually are all more dominated by men within the workforce. So kind of meaning they've got some leaders on female, so they've got some female leaders who are on the big pay that are bringing those means up for the females. How about the change over the last 5 years? So we can see for males, this is great. It's dropped quite considerably, 6% drop, with an increase for females. Like we said, really, we want to see this number growing, and that's actually dropped, which is a shame. But it's just showing it's less male dominated, which is what you would like to see. This is great. We've got nearly 20% of the companies are neutral, which is fantastic. 1 in 5. That's a really good stat, and we'd like to see that improve year on year. And the bonuses, both increased a tiny bit, still slightly more weighted towards males. And the overall split, so over here we can see the split hasn't changed at all overall, but we can see a slight improvement. This is getting a bit closer to 50-50. That hasn't moved, and that one is a tiny bit closer to 50-50 as well, which is really, really fantastic. Next up, the retail sector. So retail sector, in the top 260 overall, which is, again, I think really phenomenal. Out of 11,000, that is absolutely amazing to be hitting those heights, heady heights. Again, the quarterly splits are quite close to the overall splits in this sector, which is good to see. It means it's quite consistent all the way through the different pay quarters. We've got all top 10, the mean, the medians, favouring males, even though the overall split has increased for females, the mean and the median has actually, as we can see here, over the last 5 years, it has increased for males. So even though this has increased for females, so there's still this kind of inherent situation where there's a lot of sort of the men are getting those sort of C-suite positions, which is not ideal. So travel and transport, as I've already mentioned, this should probably split into 2 slightly different categories, but it's fine. It still gives you an idea. So in travel and tourism, there would probably be it'd be more it would be much closer to 50-50, but maybe slightly more females working in it. Whereas in transport, it is a heavily male orientated industry, just historically. So what have we got here? So again, so we start sort of seeing these sorts of companies aren't performing as high overall nationally. So we're going all the way down to like 1,133. There are slightly larger gaps here for the mean and median. So this is showing that's basically 10%. So on average, an hourly rate, men are getting paid 10% more than women in this company across the company as a mean pay gap, 6.6%. It's quite those are quite larger differences than we have seen previously. How about there's been little change in the mean and the median gender favouring, so you can see, so 85, it's actually gone up to 86, 84, that's slightly dropped, but very little difference. Doubled in neutral companies for the median, but actually it's such a low number that double doesn't mean a great deal, but it's still a good factor. So we'll celebrate that. And the receiving bonuses has just decreased, but still favours males. They seem to be about sort of 2% more, actually 3% more then, and then it drops to 2%. So slightly closer, but it just sort of dropped overall for all. And the overall split, so you can see there is a slight improvement, 3% shift, drop in men and 3% rise in females within the overall split within the industry sector. But the highest pay has really not improved very much at all. 83% of the higher pay quarter are male. Little bit better here. I mean, it is slightly better. This tiny bit better. All of them have just slightly changed, a couple of percent shift in both directions. So very, very small little shift there. Leisure IA. So leisure, we've got some nice companies doing really well in leisure. And this is again where you can really see Scotland flying the flag, Edinburgh, Fife, West Lothian, Inverclyde. So really amazing. They're doing some wonderful things there. So we should maybe go up there, have a little journey up there and find out what their secret is. So all in the top 220, which is brilliant nationally. We've got a joint with food and drink. It's got 8 medians at 0, slightly bigger gaps for the other 2, but still 8 at 0 is really fantastic. Smaller gaps to travel and transport with these are percents. So if 1.48% higher per hour, that's actually pretty minimal, which is great, but still doesn't seem right. It should be 0. And again, let's have a look at the splits. So the splits here are a little bit more varied when you look at the overall split compared to the splits across the quarters, but there are still some who are trying to rally for keeping that fairly similar. Interestingly, there's one here because quite often we've been talking about the highest pay quarter has been favouring males more than the overall split, but we do have a few here where it's the other way around. So the female higher pay quarter is actually outperforming the overall split. So leisure companies, there's a bigger split of who's up at the top. In the last 5 years, what can we see? We can see there's been a slight rise in the mean pay gap favouring males. There's been a big drop, really big drop in favouring males for the median. And this is great, over 20%, really, really encouraging. Bonuses, Still favouring males, but much closer. But percentages have dropped overall. And again, we can see a slight improvement. We're working towards 50-50 overall, and a slight improvement in this quarter. This quarter stayed the same, and all that one's bang on. So yeah, really, really wonderful. They look like they're making good headway in the leisure industry, which is nice. Energy, this is the last one. So like I said, look at this. The top one is a 257. In the top 10, the 10th one is 1971, so that seems really kind of low down overall, but as I previously mentioned, as an average, performing better than education. So really kind of interesting that you've got that divide and that split. Again, here's another example of a company, Octopus, who have got Octopus Energy. They've got two different like parts of their company registering, and both performing first and third. So really wonderful news there. And we've got not this is the first sector where there wasn't a single zero in the top 10, which was a real surprise, because the median you would expect to see some zeros, but you could argue, well, 0.2, is that as good as zero? It is pretty close, but it isn't zero. And we've got a couple of biggish splits up in the sixes here, even some sevens in the median. So yeah, little bit unusual. Energy, it's historically very male orientated, so you can see the splits here. Most of them, apart from the top three, actually, the top three are all quite not quite so bad, but these are very heavy towards males, all over 70% male. And as an industry overall, it's actually yeah, it's improving. So it was 72% male, now it's 67%. So that's an improvement. The higher pay quarters dropped slightly towards 50-50, which is great. This has also dropped. This has also dropped. This has also dropped. Yeah, so brilliant. They've made some good headway across all of the quarters, which is very, very encouraging. The same with the mean. The mean has dropped, which is great for males. So it means there's fewer companies are favouring males, and there's been a slight jump in females, but not a single company is neutral. And that's a real shame. And this is a real surprise. We've had two sectors where over 20% roughly have been neutral, and here it's currently zero. It was 1.1 5 years ago, but now it's zero. So that's a real shock. And actually the median has got worse, which is a real surprise to me. That's unusual because of the way it's calculated. Bonuses, oh, good industry to work for bonuses. Get in there. But it's dropped slightly in the last 2 years. 5 years, sorry. So we can then just have a look at how the top 25 performed over time. This is just a quick sort of overview. I've done two at a time just because it seems it just seemed okay to sort of do two at a time. And it's also quite nice to have a slight comparison between the two. So you can see food and drink, lots of greens, really showing them performing well overall. So let's just sort of maybe chart a couple of companies. So education, the City Literacy Institute has remained most consistent since last year. So you can see here both in the top 50, both years, which is fantastic. Along with Sparshalt, I hope I'm getting these names correct, College, Mansfield, is it Mansfield College? Mansfield, yeah, Mansfield College. Eden Projects, Long Road, and BHT Sussex have all been really consistent performers over the last 3 years, all remaining in the top 500 for those 3 years, which is a really great effort. Also, the Autism Initiative UK have been pretty consistent for the last 5 years. So really encouraging that some companies are managing that consistency. In food and drink, we've got several have remained in the top 100 for the last 2 years. So we can see, so Demi Power, both Demi Powers. In fact, oh no, that one didn't do so well that year, but two of them performing well over 2 years. Field Rose Limited, top 50 for AG Restaurants, top 68, but still top 100 for Wagamama's. So sometimes you've heard of some of these companies, other ones you might think, oh, I've never heard of them, but they might be a conglomerate of various household names that we are very familiar with. Road Chef, quite consistent, even though no dark greens, very sort of consistent over the last 5 years, which is really wonderful to see. We've then got retail and travel and transport. So again, this time more green here than on this side. In fact, only three little green efforts overall in the last 5 years. So in retail, what can we celebrate here? So in these 5 years, a retail company has entered the top 100 only 3 times. So Sea Retail Limited, Fresh and Wild Limited, and Woodthorpe Hall Garden Centre. They're the only 3 who've managed it in the last 5 years, which is a good achievement for them. While some have had pretty good consistency over the sort of last couple of years, Uniqlo have kept up. Peregrine Retail Limited, Lacoste UK, Gloucestershire Gateway, Black's Outdoors, they've all sort of been pretty consistent over the last 2 years, which is a really good achievement, not letting go of their morals there. Travel and Transport, so no dark greens, and only 3 times have they appeared in the top 500. So GeoAmy achieving that twice, and IAG Cargo Limited achieving it once back in 2022. What else can we say? So others have stayed in the top quarter nationally, which is really impressive. And this includes the likes of Momentum Services, International Logistics, British Ports, London Heathrow Airport, and DHL amongst some of them, DHL Aviation. So just achieving those kind of top spots for a while. And finally, I mean, again, like I said before, energy looks a stark picture here. So few, just those 3 light greens and very few ambers or hessians, as I think I was calling it. So Octopus, Shell, UK Oil Products, and Octopus Energy Operations are the only ones who have got into that top 500 mark. But still a wonderful achievement to have done that. But achieving okay overall, as we previously said, with their average. Leisure, we highlighted some of these earlier in the top 10, so we might be able to mention some other ones who are slightly lower down in the top 25. So standout Edinburgh and Leisure, Fife have been very consistent over the last 5 years. Sheffield City Council have been really consistent. Look at that, 3 years in the top 20, amazing. Other consistent companies with high appearances, Inverclyde Leisure, can't even read my own writing, which is really useful. Inverclyde, they've been pretty consistent. We've got Vision, Redbridge, Rochdale, all performing really well over the last few years. Already mentioned the 3 companies in energy who have come over the top 3, but also we've got some companies who are appearing in the top 2,000 for the first time. So they have been submitting previously, but only just appearing in the top 2,000. So we've got the likes of ASCO, Equinor, Philips have appeared previously, but then had a little drop last year. EDF Energy, Cat Trading, all doing really well to get out of that below 2,500 and get into that top sort of quarter. So sorry, that's sort of feels like it's gone on a little bit samey, difficult sometimes to judge it up. I could have worn my fun hat and some funny glasses, but I didn't. So there we go. I could do that next time. Special requests if you want me to come do it personally. The Equity Index report is now available, so do feel free to request it. So 5 things, Leanne alluded to these earlier and said I was going to go into greater detail about them. So top 5 things you could do to close organizational pay gaps. So you can target 0 pay gaps on your strategic plan. So really make it an absolute effort to get those gaps down to 0. You can conduct regular pay, excuse me, equity analysis. If you don't look at something, it's like going to the dentist. If you don't go to the dentist, you don't know anything's wrong. So the more regularly you go, the more you're kind of aware of things and the more likely you are to deal with it. So making those more regular would be a really powerful way to help you achieve that. Ensure men and women have the same pay and benefits for shared parental adoption, surrogacy leave, etc. There's still a huge gap, and one of the reasons that kind of women end up in, say, lower paid jobs is because they're leaving to look after children, have babies, etc. And it's just, it means that it's much harder for them to come back in where they were before because they've had that little break, whereas it's just sort of not stereotypically, but it's just men end up staying in more. But a lot of companies actually don't offer the same leave. So really now men and women should be able to split that kind of the 1 year leave for a new baby 50-50, and that should be totally acceptable. A lot of companies don't offer that to males, so that would also help. So making sure that those are equal would be fantastic. Calculate and publish your gender pay gap stats. By publishing it, you're kind of you're airing your underwear. You're kind of saying, okay, yeah, this is us. This is what we're doing. So sorry, I just offended Ella there with my with
don't air your underwear.
Yeah, no, I won't air my underwear. But
Tom, wear your hat, but
showing your true colours, maybe that's a better description. But by publishing it, I think it makes you again more aware of, like, oh man, now other people can look at us, so we need to make more effort. And finally, form a male ally group, because a lot of males in these companies get very kind of pressured by like thinking, oh, they just want women to take over and we're all going to be out of work. It's like, no, it's not the case. You've got to realize the difference it makes to have that better balance up at the top. So to form a group of males who are kind of ally to this is a really powerful way to achieve that. If you're having issues with your gender pay gap reporting and you need some help, Lead5050 can help with that. We can do statistical collection and analysis of your data, your gender pay gap data, and other data if you wanted to look at it. We can write your report, because you do need to submit a report, or if you're making a report public. And we can also give you some competitor analysis. We can only give competitor analysis on companies who do submit to the government, because we're not allowed to just go into a competitor and say, can we have a snoop around your data, because that's not allowed. So if they we can do that.
If only we were, Tom, wouldn't that be wonderful?
Well, it would be, but then that is also, that's quite a scary, like Big Brother. You got to have some things that are private. I feel I've gone on far too long, so I'll hand back to Ella and Leanne, but thank you very much for listening.
Thank you very much, Tom. No, and what I love is you make it engaging. Data, numbers, it's fantastic. So thank you very much for your I don't know if anyone's got a burning question, please pop it in the chat. If not, you can always email me. I'm aware of the time, and we've got a couple of minutes. But please contact me. I can send you the report. Yeah, and thank you very much for attending.
Thank you. Lovely to see everybody.
Nice one. Thanks,
Thank
everyone.
you, Hamish, Nay, Anne. Thank you. And Dirk, thank you so much for coming. Thanks, Nay. Thank you. Thanks everyone.